Hello, fellow traders. 'Tis I, TheRumpledOne. It is Monday, December the 6th. The year is 2021. Let's talk trading. Keeping it simple. Focus on reality. These videos are for educational purposes only. Your results may differ from mine. Keeping it simple. That's this month's mantra or focal point. And today I want to talk about reality. And I've talked about this before. The thing about reality is what it is, not what you think it is, not what you want it to be, not what somebody comes up with in their mind. Just reality is reality. And in trading, certain things are real, such as the daily open. That being said, different brokers open at different times. There can be, I think, up to a 2, maybe a 3-hour difference. And so on that particular platform, the daily open is one thing, and on another platform, it's something different. But from your perspective, your platform, the daily open's the daily open. That number is not going to change until the next day, and then we get a new day, so we get a new daily open. Just like the previous day's high and the previous day's low, and the previous day's open. Once those lines are put in, that's it. They don't move. They're real. But something that kind of prompted this talk today was I was reading on another forum, and the trader said something about, well, the M30 supply, blah, 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 but then we have to go to the H1 supply. And I'm just shaking my head going, price is the same on all the charts, and, the H1 chart really isn't any different than the M30 chart. It's just we've got twice as many opens and closes, but price moves the same. So that's where you have to watch out for getting fooled by some concept like supply, demand, support, resistance. Whereas previous day's high, previous day's low, that's it. There's no debate if you're looking at the same chart on the same platform. So let me illustrate that. Right now we're on the M30 chart, and you can see here price crossed the previous week's midpoint. It did it once, fell back, did it a second time and fell back, and then continued down for a while. So this point, hard line, price either closes above or it doesn't, either closes below or it doesn't. And you could trade accordingly. And if you switch over to H1, you pretty much see the same picture. The only difference is right here we have this 30-minute candle that reversed right here. And remember what I said in last night's video or yesterday's video was the reason I switched to M30, because sometimes at the bottom of the hour price likes to reverse. So you see here that was a 1530 candle, this was a 1700 candle, that was a 1800 candle. But so here this was a 1730 candle. So once again, price reversed on the 30. It's just something that that Walmart made the observation to me, and it's something I, started to look at. And so now it's something I can take advantage of. And one of the things we talk about, once again, simple, right here, we have this lower wick zone. We've got the open and we've got the low. This area is the wick zone. So you can see here, if you look left, this candle touched, failed to penetrate and then moved up. And then you can see here, this candle came down into this lower wick zone. And if you look left, you can see it didn't get this far. Then it came back and reversed. Those are little clues. It's not difficult. It's not conceptual. It's just price doesn't like staying in the wick zone. That's based on statistics. There's no nothing non-real about that. There's no phony baloney conceptual, other than the fact that time is a concept, and then we put these marks at certain times. But the reality is, when you mark up a chart with the close or the bottom of the candle and the low and the top of the candle and the high, price doesn't like staying in those zones. And so in this particular case, it reversed out. In this particular case, it closed, but you can see what happened in the next candle. It didn't stay in, didn't stay in. And that's just a simple fact that you can use in your trading. But a lot of people, unfortunately, they keep looking for more. They keep looking outside themselves for the answer. But when it comes to trading, is, as I've said before, you put the trade on, nothing else matters after you put the trade on. You're either going to exit with the profit or exit with the loss. So you put the trade on, you have your stop loss in place, and then you wait and see if you can take some profit. And some people put their TP in place, walk away, and see what happens. Do they take profit or do they take a loss? And that's just how simple it gets. So, we're looking at daily lines, weekly lines, and we've got some monthly lines, but we're nowhere near the monthly lines at the moment. But just having these few lines on the chart, trading in the direction price is moving, looking for certain clues, such as looking left, looking at the wick zones. You can pick up 2-3 pips or more per trade, but always remember, never forget, these videos are for educational purposes only, and your results may differ from mine. Because we're not using the same brokers. So you might have, this line might be a pip higher or pip lower, or a couple pips higher or lower. Your spread might be bigger. Your commission might be higher. So I might pick up 2 pips, you might break even, or vice versa. It just depends on the broker. But as far as, focusing on reality, there's no need to play those conceptual games that they have out there. If we scrunch up the chart, we can see here what price did. It crossed through these lines last week. And now, since Friday, you can see what it did now today, what it's doing. It's, watching price. That's pretty much what we're doing. And then we pick a direction, and we see if price will continue in that direction. So when price comes to these extremes, that's when you start to look for price to reverse. And it's pretty interesting because I was talking to Walmart earlier, And I said, this was a return bar, this was a return bar. And price came down here and it returned to a return bar. But right here, that's a return bar. It returned to that open. And guess what? This here's a return bar. So I'm looking for price maybe to come back down to this area. It may or may not happen. But I just noticed those return bars, price usually returns to the open. What's a return bar? It's just a big bar where the body is bigger than most of the bodies on the chart. In fact, I was thinking about maybe, I'm not sure if the Smart Ranges has the top minus bottom in it. If not, I will have to add that option. So looking at the monthly chart, 40 pips off the monthly open. We're still in the monthly wick zone. And you see here we're in this wick zone. Price did not penetrate that bottom. So long as price stays, above 31.33, we should look to see price go up. But actually, we need price to stay above 31.94. So otherwise, we're breaking through the previous month's low. All the gap, no, 1, 2, 3. We've got 3 gaps that haven't filled. We filled it on the pound. You can see we hit the pivot already. We're putting in the opening range for the week still here. We're in the opening range for, oh, actually, no, we're below the opening range of the month by 5 pips. We actually got into it. Missed the monthly high by about 10 pips. $386 below the yearly open. For the week and day, 43 pips above the open. We entered the inside bar from 2 days ago, but prices dropped below it. We're about 11 pips below that inside bar low at the moment. Still plenty of inside bar action here on the daily, some on the weekly, and even more on the monthly. Range 72 for the pound. We've got 5, 10 pairs over 100 in range. You can see came back into the buy zone and price took off. Rats, the range is finally large enough. You can see that the red rats enjoyed a feast. Almost got down to the green rat zone. Then price turned. Took out the weekly pivot and the daily pivot. Monthly pivot, not yet. We can see that on the missed pivots. So 133.95.9, call it 96. We need to take out that monthly pivot. In and out of the lower wick zone. Remember, price doesn't like staying in the wick zone. On the scalper, you can see lower high, higher low right now. If you took that last trade off of M1, you're up a pip, almost 2 pips right now. Looking at the price action simple using the sweet spots with the Walmart lines placed in there. You can see last hour gave you a nice run. This hour, not so much. But then again, you shouldn't be trading Walmart at this time of day. 3 ball showing the H1 ranges. You can see here we are moving up off of that 1 ball on the H1. And fellow traders, Always remember and never forget, it's not what you trade, it's how you trade it. Drain the banks.